Assalamu alaikum guys, it's Subhan Mustaba. It's an educational video, short, it will be short. The title you already know about from the title what I'm trying to talk about. Too many times people ask me to what make video on imbalances. So simple imbalances. Today topic is our imbalance fair value gap, which we called FVG or whatever you call it. There are too many fancy names, but we call it as imbalance. So first of all, what is imbalance? From the name, it shows that imbalance, im and balance. When there is no balance, that's imbalance. Simple. So in trading terms, uh, when there are, let me get a quick, when you have no counter orders in market, it creates imbalance. When you have no counter orders in market, it creates imbalance. What does it mean? Like it means if on a certain level, look how this market moves. This market moves between buyer and sellers. Okay. Now for a certain level, if someone is buying, just buying, and no one is selling here, for movement of market, you need to move, like if you want to move some like this, you need buyers here, sellers here, buyer here, seller here, and vice versa. But when you don't have any sellers, only buyers at certain level, then at that position price creates imbalance like this. It shoots up like this and it creates imbalance below. Same goes to downtrend. No buyer here, everyone is selling. It creates imbalance. Third type is limit orders. If on a certain level there are only buys or sell limit orders, then price creates imbalance there. Hopefully you get the definition. Uh, I explained it very in a very simple way here. Now, second part is how to uh, get these imbalances on your chart, like how to find imbalances. There are two ways. First, I will show you on chart like by manually how to find, and then I will give you an indicator that will ease your life. Whole life, it will be your life will be easy. Okay, there is one more point which I discussed with a member right now in our Discord, that imbalance doesn't give you a direction. Like if there is imbalance created here, it doesn't mean price will come here and then go up here. You can't judge market on just imbalances. It doesn't give you a shit. Okay. It just created here because there are too many buyers, no one was selling, so imbalance created here. Same goes with the shorting. So with only one thing like imbalance or fair value gap, you can't judge market like this market will go down now and or this market will go up. No, you have to add some market structure on it, or range, or anything, whatever you use for finding direction of the market. After that, look for imbalances, that if there are imbalances or not. Where these imbalances we use, I will show you, tell you at end of the topic. So next thing is how to find imbalance. Okay, so first let me get it to. like this. Okay, this is your suppose one candle. Now I am going like imagine market is going up. Okay, one candle created, after that another candle created here, and then third candle created here straight. Now these candles are like me, tiny candles, tiny na skinny candles. I am also skinny. Okay. So on these three candles, there is not a single shadow on it, like there is no wick on it. Three candles. So where will be your imbalance? The manual imbalance will be, you will find like this. The first candle, you will pick top of this candle. If there is a tiny wick or no wick, it doesn't matter. If there is a wick, get that wick, mark that it. And the third candle, the down of the third candle, top and the down of the third candle, mark this. If there is a tiny wick, okay, no worries, mark those wicks. This area will be your imbalance. That is called imbalance, fair value gap. This is how the imbalance is created. Like someone buy sell here, if small wick created here, so it means someone sold here as well. Price goes up, someone sold it, it came closes here, body closes here. So on next candle, price didn't even give a fuck to anything and it goes straight up. So it means there is no sellers in it. Again, third candle created, buyers came in, they drag the price like this up, but shorters are also here, sellers are also here, small wick created like here. So you catch this wick and this wick. So that zone will be your imbalance zone. This one. This blue zone will be your imbalance. Same goes to like prices coming down, like one candle created here, a small wick, second candle created here, third candle created here with a small wick, and the difference between those two wicks will be your imbalance. So this is how imbalance creates. Now on the real chart, I will show you. Hopefully you understand what our imbalances are. For slow learners, I will show you on chart. Quick learners, congratulations, you have learned. Now you have to use it, how to use those imbalances. I will show you after this. Okay, from downside, from the bottom, I will start. Because trend is up, so I will only look for bullish imbalances. And I will show you bearish imbalances. One candle, second candle, third candle. Okay, three candles. Now I have to mark the top of this candle. Okay, marked, and the down of this third candle. Now I have to go to my settings to turn it as a blue. So this is my imbalance. One imbalance here. And yes, one more thing add here. These imbalances are reactive zones. So price whenever came here, it will react. Sometimes you will focus or you will observe in when you will mark your imbalances on the real chart, that this imbalance doesn't work and that imbalance work. Why there is a difference between those imbalances and which work and those who don't work. So I will show you which imbalances is have to forbid on which you will ignore. So okay, back to topic. One candle, second candle, third candle. Same formula. Top of this candle, down of this candle. I will mark imbalance here. Second one. One, two, three candles. Imbalance here. Okay, now look this. This imbalance reacted here, this imbalance reacted here, this didn't. So it doesn't mean that every imbalance will react. Okay, 1, 2, 3, an imbalance. Now count there. 1, 2, 3. Top of this second imbalance. Ninth imbalance, no imbalance. 1, 2, 3. Third imbalance. Okay. Now this one, now this here. It will be here. Okay. Now again 1, 2, 3. This is your imbalance. 1, 2, 3. Okay. 1, 2, 3. Another imbalance. And this imbalance remain. These imbalances didn't fill. Like I said, these imbalances doesn't show you uh, direction. Now look how 1, 2, 3. This failed. 1, 2, 3. This tagged 1, 2. So four major imbalances didn't even filled and price is going up. So they will not show you the direction. So like go like this. Now on bearish side, 1, 2, 3. This one. 1, 2, 3. What the fuck I did? 1, 2, 3, and this one. So same you have to find manually on charts. Like on lower time frame, if I go on lower time frame, I will find you on any time frame on HY from 30 seconds to 3 months and balances formed. Like on 1 minute, I will show you on recent chart now. I will try to find. Okay, these gaps are forming. So I am in a trade here, live trade here. Why I am in a trade here and why I got that trade. So this structure shift here, beautiful order block here, and look 1, 2, 1, 2, 3, 3 imbalances, and I am here in this imbalance. 1, 2, 3, this one. Okay. So on each and every time frame, you can find these imbalances and they work. So what now the final topic and what will be the work, like how to utilize these imbalances. Okay, look, there is a this is my strategy. I use market structures. So most of you using market structure and some supply and demand zones, order blocks, you all everyone are looking for those demands and those things. So suppose circuit again, lower lows are and structure shifted, price started to move up. Okay, so this is your structure shifted here and you have order blocks. Sometimes these order blocks didn't fill, they front ran. Sometimes they did fill. Why those order block and when will which order block is valid? Now this concept will also will be cleared here. So look, price, I draw it straight go up, but originally it will be like this, it will go like this. So there will be imbalance creates like there are two imbalance created. Why I bid on this imbalance, not on this imbalance? You have to mark the closest imbalance on chart with your demand or supply zone or at support or at resistance level. Those are the valid imbalances. Sometimes three imbalances creates here. Like this is your order block, one imbalance here, second here, third here. So you will observe these things on real chart that okay, there are three imbalances. Where should I have to bid? First two tricks I will give you. One, the nearest imbalance with order block you have to bid. Like if order block created here, structure shifted, and with order block there is small imbalance. So sometimes we placed bids a bit above here in this zone, because sometimes if there is a momentum in a price and price is moving quick and there is a money came in on market, and you think that this order block will not fill me, so we place bids here at the top of this imbalance or at the equilibrium of this imbalance. So if price came here and if it goes through and tagged order block, no worries, we will have a entry here. If some people do like this, one entry here, second entry here, but it splits your R ratio. So I personally, when I see there is a momentum in a market, or I think there might be chances that I got front run here, so I place bids here. My total bids are here because the order block will be just below this. There will be no much difference. So I place bids here. It gives me two things. First, if price came here, sliced through into order block and it reacted, it means my order block is valid plus my imbalance is valid. I marked the right one imbalance. One, it gives me this thing. Second, it gives me like if price touches my imbalance and it reacted here, it didn't fill the whole imbalance, it goes up on that bounce, I book my uh, profits quick, like 0.5 or 7 1 hour, at least 0.6 to 0.5 to 0.8 hour I got on average basis, because I know that this imbalance doesn't fill yet, it is impartially filled. So these areas will tag again, might tag again, because there are the orders, yet orders are here, and totally all orders didn't pick, so they will try to force market back down to these levels and to get again here an entry. So then I place my bids at order block, because imbalance is impartially already filled, so there are the highly chances that price will revisit this price again here at order block, and it will give me my best entry as well. So on the first bounce I got like 0.5 R, again I am risking 1 R here, so it means originally I am risking 0.5 R here. Psychologically it is what it is, because if I got stopped out first, I think I know that this order block is valid, so I stopped out. I already took 0.5 from the bounce, so on the second attempt I stopped out. I am down 0.5 only because I already took 0.5 here, so it will not hurt me as well. So this is my trick, this is how I placed and I execute things. On first bound, if price slice through here and it come by it started to bounce up here, then I don't pick, like I don't book profits like if it is on M5 or M15. Yes, if it is on H4, then on slightly bounce of 3 to 4% of market, I book my profits, and then I checked M15, M30 where price shifted structure. If it shifted the structure, then I place bids accordingly, and then I continue my trade, and then I hold. Sometimes I hold, sometimes I don't, because I don't have stamina and I have issues with the this like in a swing trade I can't hold much, like especially on leverage spots. It is easy. It's another account I don't see, neither I remember those positions, so I hold easily on spot. But on uh, leverage, my one there are two accounts I running, two three accounts, sorry, I am running here. So it gives me a psychological pressure. I have to quickly exit trades, and so on one of my account, I risk much more, so I can't handle it quickly. This is my intraday strategy. I have to make something out of it, and my trade is done. If I have to hold, I have separate account of spot, so I hold there. I like quick money. On this future trading, I have exact levels of my accounts. Whatever I make, I withdraw quickly on a day. So this is my strategy. It's up to you. What's your strategy and how you use this strategy? So it's up to you. So okay, back to topic. So this is how bullish imbalance and valid imbalance I show you how to use it. And for entries, same goes to exact to any trade. Same like for a single trade, you have to know your entry, what is your stop loss, and what is your target. These three things are the most important until unless you proven wrong. So yes, this is imbalance, and this is how it works out here on the market. Like I give a trade of Solana. I will show you what I'm doing, trying to do on Solana here. So, so structure wise, MSB created here, order block created here. This is H1 order block. It tagged, shoot up, price goes up, shows me a momentum. After MSB, it creates POS, which gives me the direction that it will go up again. For this liquidity, there is a liquidity as well here. This liquidity generating here. So the momentum is good. Buyback was very good. Price slowly chopping here. It came to order block and someone bought a big here. It creates breaker here, H2 breaker here, and I think where did why I am, yes. So it's related to the topic. That's why I'm explaining my trade here. Look at this imbalance. Now was H2 breaker here. Our supply was flipped. So I didn't knew that whether this H4 order block will be tagged or not tagged. So I placed my bids just above that imbalance at exactly at this low. So I placed my bids because the order block is not far away here. So if price came here, it reacted, it will validate my point that this order block or this H2 breaker, small breaker, this one is valid, and I will hold my trade the way it bounced here, a quick buyback. So I'm expecting it again towards these, and this is 2.7 or 3 hour trade it is. I think 2.7 hours. But I am looking for 3 hour because there is another high as well. This one on daily. So might be if it depends on market situation. If price goes according to my thing, then I will hold it. Another thing matches with my imbalance is my OTE, optimal trading entry. Look at this one, 0.62, just above this imbalance. So if price came here, it will slice through and this will go. So I have my beautiful confluences. I don't know it will work or not, but yes, these things we watched on chart, and then if price reacts, and then take decisions according to the market conditions. Now final thing is manually you find, like, you look, there are also two imbalances here. One imbalance is there, H2, second one is there. I'm placing bids on this one on H4. Like I find my H4 imbalance here because it matches with breaker here. That's why I'm placing. I am not placing on this one. So back to the last point, the most favorite of newbies. Newbies will be very happy after this. Your indicators. So you can use indicator for imbalances as well. I use FVG, fair value gap by inch. This one, inch. So you can select this one. I will give you settings here. First one I turn as red, it means this one is not filled, and I keep this as whatever my background is. I don't give a shit. If you want to see filled order blocks as well, no, sorry, filled fair value gaps, give it a color here, like it shows you color of the fair value gaps, which will be red. Like I set as red, it gives shows me that these, look at this small, which is, this was a huge fair value gap, now it is, let me show you on H4. Look at H4, there are small fair value gap, so it will give me a quick overview and straight away that this will easily shows on the chart this color. So for the filled FVGs, the next color, whatever, I don't use for filled FVGs because I don't uh, I don't need it. Sometime I use inverse fair value gap. Oh fuck, I didn't tell you about inverse fair value gaps. Let me tell you this shit as well. But those are rarely used, so that's why I forget. Okay. So that's why I don't use this color. It's up to you. Nothing else. Don't change anything else. Simple. Okay. And then use it for entries. I personally use fair value gaps for only for entry. Just entry. I am watching my order block here. There is, I just bought DYDX. It hit my TP. Look. Now I show you something here. Mm, this mitigated, I will give a green color for understanding. So these green lines are filled fair value gaps. So look, this was the low at this is a Monday low here. Equal lows created, yes, but again after creating equal lows, lower high, higher low, and higher high. Structure shifted, order block created here, and I had a target of this. This is H2 supply here. This is H2 supply here. At 3.510. This one, yes. So back to 30 minutes, structure shifted. Then I marked my order block. Okay, I have a huge imbalance here, and the market at that time was tanking. So I thought it will fill. And in the imbalance, sometime you will see on higher time frame that imbalance is in between. Like this is order block and imbalance is also here on H4. You will see, you will mark H4 order block and then turn to H2, you will see an order block there. So these are the very valuable order blocks. So I placed my bids. Look how it reacted. Price came here, it reacted, then again came, it didn't fill yet fully. There are chances that it came back again, the way it is rejecting from supply here. So there are chances that it will came here, but look how beautifully it reacted on the fair value gap here, and it goes straight up. Like after, then it's up to you how you manage trade. Structure shifted, breaker created, again fair value gap, it came to breaker, go up, BOS created, order block marked, and then BOS again created order block, and it is still bullish. And order, look at this fair value gap as well. So I will place bids again here if I want to trade. So don't need for me to trade, but the way price is slowly bleeding, like look at these candles, like it is coming down, someone buying it, buying it, buying. So the way it came down here, I again buy here because the TP will be in one candle. Buyers are strong here. So this is the behavior of candle. Okay, the last thing is inverse fair value gap. Let me show you from DYDX. It is an H2 supply. This whole zone is H2 order block. This fair value gap created here. Okay. On M3 this structure is shifted. Mark this order block, fair value gap here. So this is complicated shit. It will come to you with the passage of time. So price again continues here, come down, created one another fair value gap here. So this is called overlapping fair value gap. This fair value gap is filled, but after that again at the same place fair value gap created. So there are more chances that price visit. If visits here, it will reject. So these are inverse fair value gaps. So these are fair value gaps usually formed at top and when you are in scalping mode. So if you have edge on scalping, these will work. Other than that, they will work like rarely. They will form rarely, very rarely. If I find one on the real chart, so I will show you. Look, this one here, created. I marked it. Price came here, it reacted, reacted, and then slow down, goes a bit. Again, that same place. Look at this one. This one I also personally didn't see that. Cap, overlapped, order block here. Few things are matching. Price did a good job here. So this is your what we call it, inverse fair value gap. Hopefully you guys understand it. Now what are these fucking fair value gaps? Why people use these fair value gaps? How to take entry on these fair value gaps and blah 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 whatever. And this one, this was a fucking trade on I shared in Discord here. Mm, at morning in morning. This one, where is BNB trade? This one, yesterday I shared this one here, and at last minute I cancelled it. The way it was coming down, I thought things are going to down because Bitcoin was also not behaving really good. So I thought it will come down, but that was a sniper entry. Fuck it. I will find new one. So hopefully you understand the concept of fair value gaps, where to use it. Now look at this one. This didn't filled or in order block. As I said you will find some fair value gaps in order block. So whenever price came here, it will react. This one will react because these are the valuable gaps. Inside order blocks, three types I show you: overlapped for gaps, and third one nearby to the whatever what's you called it at order blocks. Now price is going up, so we will 100% see fair bullish fair value gap and bullish order block. One structure shifted, then we will turn again. So yes, it is from my side today. Hopefully you learned something today and apply it. Don't rely on fair value gaps only. I just wanted to cover this topic. So hopefully I increased your a bit of knowledge or about trading. So thank you for tuning till last. See you in next video. Next video must be on market update. So once market start ranging, then we will discuss. Other than that, everything is bullish, shorting is haram. Thank you very much. Allah Hafiz.